Zee Entertainment is the stock that is reacting quite positively. Karan Taurani from Elar Securities, who tracks the stock closely, is with us right now. Karan, is this a big sigh of relief that they have signed an agreement with Sony, settling all the disputes? We still don't know what they had to do to sign this agreement, if there's any financial implication at all. But at least that overhang goes away, right?
Yeah, so I think this is definitely big relief, for the valuation multiples. If you look at Zee in terms of, P multiples, they are trading at sub 10. If you look at the core broadcasting forward P, which is phenomenally low. And the reason for that is, the overhang around these kind of issues. So one is, the issue with Disney, wherein they kind of, dishonored the contract because of the merger being called off on the sports TV rights side. Second was this issue with Sony, wherein there was a penalty which could have been imposed. And third is the issue with the NCLT on the creditor side with IDBI and some other banks which are there. So I think this is, one of the things, which is kind of getting resolved and definitely will provide a big respite to the valuation multiples. We are not factored in any kind of a big negative impact of this on our estimates because there were litigations under process. But net, I think, yes, you will see a re-rating in terms of valuation because of this issue being resolved.
Already seeing that big relief come in, 9.5% higher and still counting upwards in Zee. But Karan, does it become a buy, Zee?
Yeah, that, in terms of execution, the performance of the company has definitely improved over the last two. So I think, we have a buy rating on Zee with a target price of 210. We have seen quarters. They had kind of reached levels of 8-9% on EBITDA margin. Today, they're about 12-13% EBITDA margin. And they've given a very strong guidance of 18-20% EBITDA margin over the near to medium term. And I think there are triggers, to reach that margin. If you look at the losses in ZEE5, they've been converging. If you look at a lot of efficiencies around employee cost, technology cost, other expenses put together. So I think if this kind of a momentum continues, you will see margin improvement. And as and when the margin improves, you will see more and more respite for the valuation multiples as well. And secondly, I think on the growth front as well, I think you will see acceleration in the growth as well, because I think Q3 will be strong this year around. Because last year you had the Cricket World Cup, so a lot of the ad spends actually moved, towards sports as a genre. But this year GEC might make a comeback, and Zee could be a beneficiary of that. Plus FMCG as a vertical is starting to look good in terms of ad spends. So I think putting everything into perspective, if you see better growth rates on a consistent basis with an improved margin because of the cost-cutting initiatives that the company has taken, you will constantly see a gradual re-rating on the stock.
Karan, was this an issue at all? Frankly, because everybody knew that this is more like a issue which in a sense did not require Zee to make any kind of a contingent liability provisioning. Also, it was not having an impact on the business per se. So from a market standpoint, was this, this is a good to have thing for Zee, but nothing which changes your earnings in the near term.
Yes, absolutely. As I said, we had not penciled in any kind of negative impact because of this litigation, because it was status quo for now, and it does not change earning estimate. But the fact you have to watch is that the P multiples, have come down very sharply. As a stock, Zee has come back to that 135, 140 levels, which I think is very compelling. So at these kind of very low valuation multiples, any kind of respite will be a positive trigger for the stock.
And that positive trigger is something that we are watching out for. But Karan, what other things are still in overhang? What are the things that we should be watchful of? Just that so much has transpired with Zee that we have lost track of the monitorables. What is the other important overhang that you're watching out for?
So I think, as I said, in terms of overhang, there are still a lot of these NCLT-based creditor issues which are there. There are also concerns on the balance sheet being heavy with, high inventory. There are some kind of concerns that, you could see a potential write-off or something of that sort, like a one-time expense or extraordinary item which is there, which we have seen historically in the past from Zee. So hoping that, most of these issues are resolved with time, because only that will kind of, provide a valuation rating for the stock. And I think in terms of margin as well, I think the execution has been very, very good over the last 2 quarters. As I said, it has seen a sharp improvement. Until about a year ago, they were at, sub 10% EBITDA margin. So I think on margin front, on growth front, as and when we see things coming back, you will see the stock moving up gradually as well.
So much for helping us decode this move on Zee, whether it's warranted and what's next really for the company. So Karan does have a buy call on the stock with a target price above 200 rupees. Time.
If you like this video, then like, share and subscribe to ET Now.